In this video, I'm going to show you a TDI hack that only means you have to trade once per week. Welcome back to Trades by Mo, and in this video I'm going to show you a higher time frame method that will allow you to use the TDI in a way so that you only have to trade once per week. Working on a weekly basis here, so imagine this square is week 1, that's an awful square, and then imagine this yellow line is price, so where it goes, say it makes the high of the week here, goes through, makes the low of the week there, and somewhere there. You know this blue box represents the high and the low of the previous week. So the Monday starts, the price comes out into the new week, and basically this method we're looking for a break of the previous week's high or low. So whether price comes up and breaks here, which breaks this line here because this is the high, or vice versa if it comes out and breaks the low, which would be here. So our method is basically watching the 4-hour chart for this to happen, and we're going to use one indicator, which would be the TDI, so we can get that up now. Doesn't matter which TDI you pick, they're all pretty much the same. Personal preference, but I like to remove the background colour by taking these two and then just making the RSI solid green rather than both red and green. I know this isn't a proper chart, but imagine this is the TDI and this is the price moving up and down the previous week. Like I said, it comes into the new week, does what it's doing, and here it comes out of the previous week's low. So you can see on the TDI below here there is a shark fin. Now shark fin is basically when the green RSI line comes out below the blue band and straight back in. So you see these two blue bands here, here's the top one, here's the bottom one. It's when the green line spikes outside of the band and goes back in. So we call the shark fin. Vice versa on the top, this would be a shark fin. Imagine it as an actual shark's fin sticking out of the water. Price comes and breaks the previous week's low. It's here. We can then go down to the 1-hour time frame and we're looking for an M or W pattern, and I'll show you what that is in a minute. On the 1-hour chart will look something like this. In this example, this would be a W because you can see there's two lows. Just imagine a W has been drawn there. Vice versa, if it came out of the top, it'd come out, it'd make a shark fin on the H4, you go down to the 1 hour, and then that shark fin would look like an M, because there's two highs. And we're basically looking for a midweek reversal. It doesn't happen super often, but it is a higher time frame method, so they don't generally happen as often. There is a lot of different Forex pairs that you can trade. On a weekly basis, you can look through all of these different pairs to try and find it. So I'm going to show you some examples now. So, like I said, the blue boxes are the previous week. So this cross here would be going from Friday evening to Monday morning. So start of the new week, this right here, we're on the 4-hour chart, and we're basically waiting for price to either break the low of this week or the high, which would be here. And as you can see, it definitely did break with one candle. So once this closes, we now have RSI outside of the bands, and we're basically waiting for the midweek reversal. So you can see it starts to come back in here, and when we get the shark fin come back in, which will be on this candle, we can then go back down to the 1-hour time frame. So this is the 1-hour time frame for that exact move. So price came into the Monday, into the new week, broke the previous week's high. This candle here came up and it made a long slow M, and you can see the second leg of this M was this railroad track here. A good tip for this is to wait until the green RSI line closes below the yellow market baseline on the TDI. That's a strong indication that the price is going to move down. So we'd enter for a sell here, put our stop loss just above the high, and this one single trade moved about 138-ish pips, which is very nice. Vice versa, now I'll show you a buy. This is the previous week, and then we're basically waiting for price to either break this line for the high or this line for the low. You can see it got close to the high here, but it didn't. Came back down Tuesday, Wednesday. If I draw a line there, you can see clear as day that it closed below it, so that's officially broke the previous week's low. You see there is a nice clear shark fin on the TDI right here. Spikes right out of the blue band and then right back in. This is also a nice big W, indicates a midweek reversal. Wait for the green line to cross above the yellow market baseline, so it would have been on the top of this candle. Set the stop loss to the low, and that trade itself rode up about 71 pips, which is very good. But it is a super simple method. You basically just want to box off every single week, just like that, just box them all off, and as soon as price comes through and breaks a previous week's high or low, you want to watch for a midweek reversal that usually happens around Wednesday or Thursday. Check for that shark fin on the TDI, and then wait for the green line to cross the yellow line on the TDI, and you can get in for a long or a short. I would recommend checking, like I said, around Wednesday, Thursday, but the rest of the week you pretty much don't need to check the chart. So if you've got a busy lifestyle, this is quite a good method for you. But yeah, I hope you have enjoyed the video. Please like, subscribe, and I will see you in tomorrow's video.